Hi friends, how are you all doing? This is Sachin Nachnani welcoming you back to my YouTube channel. I hope you all are having a profitable trading month. Well, if you are still not profitable in your trading or investment journey, then do consider subscribing to my YouTube channel where I keep sharing Nifty and Bank Nifty option chain analysis on a regular basis. And besides that, I also share lots of interesting result reviews which are in depth and which cover fundamental, technical, and option chain analysis. Let's do the option chain analysis of Nifty and Bank Nifty for tomorrow, that's 22nd of July. Nifty today closed at 11,162, up by 140 points, that is 1.3%. With today's up move, in the last 5 trading sessions, Nifty has gone up by, do you know how much? See it over here. It has gone up by 555 points in the last 5 trading sessions. That is over 5.1%. Nifty continues to be puts heavy with over 3.2 crore shares on the put side in open interest, while on the call side is just over 1.91 crore shares open interest. The highest open interest of almost 32 lakhs now stands at 11,000 put, while 10,800 has the next highest open interest at 31 lakh shares. But the highest addition today has actually happened at 11,100. If you had seen my yesterday's video, highest put addition yesterday had happened at 11,000 and today that has happened at 11,100. This goes to show the strong bullish momentum that is present in the market, and put writers are taking full advantage of it. Strong open interest addition is happening across various strikes on the put side. On the call side, the highest open interest continues to be at 11,200, where actually some bit of call unwinding has happened because of the strong up move in Nifty today. And after that, the next highest open interest has actually shifted to 11,500 with a premium of just less than 5 rupees, which is where the highest open interest addition has also happened. Though call side is also witnessing good amount of open interest addition, the quantum is not very high, and that is because traders are afraid of writing calls seeing the strong momentum in Nifty on a daily basis. On the charts, since the time Nifty has crossed the 200 DMA on Friday, it is continuing to witness strong momentum on the upside. It is opening with a strong gap up every day and continues to trend higher. In fact, today's move has happened on higher than average volumes. However, one thing to note is that such a strong rally of 555 points, can it continue to go one way, or will there be a pause or even some bit of correction in the near term? I believe that in this week we can see some bit of consolidation and correction for a day or two because of the strong rally that has been witnessed, and those dips should be used as buying opportunities. In my yesterday's video, I had shared a very interesting strategy which I had not shared earlier. Do check out my video in the link above to understand the strategy and how you could have benefited if you had implemented it. For today, before sharing my action plan, we need to have a look at a couple of important points. First is, as I told you about the strong up move which has happened in the last 5 trading sessions, because of which Nifty has gone up by over 555 points. Can this continue to sustain, and can the Nifty go up by another 1 or 2%? Well, it is possible because the momentum is very strong. But in my opinion, it is high time that there can be a small or a minor consolidation or even a correction for a day or two before Nifty resumes its up move. What is supporting the up move for tomorrow is the results. Today, after market, Hindustan Unilever Limited came out with its numbers, and those numbers, both on the results front as well as on the volumes front, were much better than market expectations. The stock may witness a decent up move tomorrow. After market, another company came out with its results, and that's Axis Bank. On all parameters, the numbers look fantastic, and even on the moratorium front, though there is confusion, but the 9.7% moratorium which the management has mentioned for the June quarter is much better than market estimates. In view of that, there is a possibility that at least both these stocks can show good momentum tomorrow. It is possible that a few other stocks can bring down the Nifty, especially as we saw today in the case of Bajaj Finance, where despite good results, the stock came down because the stock had already rallied before the results. So many times it happens, as we call in the trading parlance, buy the rumor and sell the news. Now, given all these factors and the basic fact that you should not fight the momentum, and the momentum is clearly bullish, I'll continue with my strategy of selling puts. A risky trader can sell 11,000 put, which is around 24 rupees right now, and hedge it depending on his risk appetite so that he can pocket the premium for the next two trading sessions. On the call side, ideally a risky trader should avoid selling calls, but because as I mentioned in my yesterday's video also, I am of the opinion that 11,200 can act as a resistance at least for this week. A risky trader can look to sell 11,300 call option, which is also around 24 rupees, and hedge it possibly by buying the 11,500 call, so that in case the uptrend continues, then at least your loss is limited. In case someone wants to play it very safe, then selling the 10,900 put would be a much better strategy, because that is around 260 points away from the current closing of Nifty spot. Incidentally, Nifty futures today closed at 11,170, that is an 8 points premium. Bank Nifty today closed at 22,782, up by 460 points or 2.06%. Bank Nifty futures today closed at a premium of 33 points at 22,815 level. Today Bank Nifty has also turned put heavy with around 63 lakh shares open interest as compared to around 57 lakhs on the put side. Yesterday it was marginally calls heavy. On the put side, the highest open interest in Bank Nifty is at 22,000 level, followed by 21,000 and 21,500. However, the maximum open interest addition today has actually happened at 22,500 level, and there has been again a decent amount of addition to open interest on the put side. On the call side, just like yesterday, 23,000 continues to have the highest amount of open interest, whereas the highest open interest addition has happened at 23,200 and 23,300 level. Because of the up move today in Bank Nifty, there has been a good amount of unwinding of open interest at various strikes on the call side. Well, on the charts of Bank Nifty has again managed to close above the 22,500 resistance mark, and this time the move has happened with a bit of gap up. Yesterday's session also there was a decent amount of gap up. In my video on HDFC Bank, I had suggested that very soon we will again find Bank Nifty above the 22,500 resistance level because of the strong numbers reported by HDFC Bank, and also because 21,000 has been a very strong support level. Moreover, Nifty has been very strong, so it is only a matter of time that Bank Nifty will catch up with Nifty despite being a relatively weak index. Now this time, especially with the results of Axis Bank being announced, there will be momentum in Axis Bank as well as in couple of other corporate banks like ICICI Bank, and HDFC Bank has already reported strong numbers. So it is quite possible that the up move in Bank Nifty can continue for some time, and it can now relatively outperform Nifty. Sooner or later, we will see 24,000 level on Bank Nifty. I am not saying that it is going to happen in a day or two or this week itself, but sooner than later, this level on Bank Nifty will be achieved. So, basis all this, what will be my strategy for Bank Nifty? Since I am positive on Bank Nifty and I believe that it will gain further momentum in the days to come, I would like to play it by going long on the call side. That's why I will buy the 23,000 call option, which is trading just below 200 rupees, and in order to take advantage of the new margin regime, I will hedge it by selling the 23,500 call option, which is trading around 61-62 rupees. This way I will get a premium inflow of over 137 rupees, and the maximum loss in this strategy will be 500 minus 137, that is 363 rupees. This will be the maximum upside, whereas my cost or the maximum loss that I can incur will be capped at 137 rupees per share. I am not looking to sell any put option because I believe that this strategy gives me a much better risk reward ratio. So let's see how this strategy works out tomorrow. That's it from my end. Take good care of yourself and your family, and stay home, stay safe, gain knowledge. Thank you very much.
Do like and share this video, subscribe to my channel and click the bell icon. You can reach out to me on Twitter, Insta, LinkedIn and of course YouTube.